All right, we have to talk about Bitcoin. We have to talk about Michael Saylor and the current death spiral that we find Bitcoin in right now and what that could potentially mean for the broader crypto ecosystem. We need to talk about ZCash. This was one of the most insane moves I've seen. And I've got some thoughts here as well. There's even potentially a trade here as well that I want to share with you. Then I want to talk about the broader crypto market. And then we are going to discuss the stock market, which is also pulling back quite a lot today, to be honest, alongside gold, US dollars up, and I want to explain exactly why that's the case. I'm also going to tell you how I think this plays out this year from a seasonality perspective, where I think Bitcoin is headed, where I think equities are headed, because there is like a cyclical pattern that I'm noticing in the market, not only on Bitcoin with its 4-year cycle, but also throughout the year on equities as well, which I think gives us some insight as to when we actually should be buying risk assets. So Noti Gang, comment if you're here. We'll run the giveaways in a future video, but I haven't been that active over the last couple of weeks on the channel, but we got some awesome stuff coming. I said to you guys, I would only do these market updates when I felt like I had something to say, and boy, I definitely have something to say because there is a lot happening right now. There's also a couple of opportunities I want to talk about later as well. So without further ado, let's get into it. Let's look at the technicals for Bitcoin. Broke down the prior all-time high level. This was really a level we didn't want to lose, and to be honest, the real downfall started as we pivoted under the 2024 breakout level at 74K. I did say at the time, in my Discord AMAs, which I do every Tuesday, that this was a sign that the market was going to break down, and I was pretty much risk off at that point. But now we've had the full breakdown. If you do look at the weekly chart and you just hide my lines here, you can see that we have rejected off the money noodle on the weekly. We've also broken back down below the weekly 200-day moving average. It looks like we're going to make lower lows. I'll talk about later in the video how I think seasonality could play out for Bitcoin, but in my opinion, this is not going to be a quick road back. And the reason why I don't think it will be a quick road back is because of what's happening with Michael Saylor, which I want to explain now because there is a bit of a vicious feedback loop, which really helped Bitcoin pump to the upside when it was in our favor, but it's the exact same trigger that is causing Bitcoin to make lower highs and lower lows. But before we get into that, let's just map out very simply the structure of the market right now, because even without knowing the fundamentals, you can really gauge a lot into where the market is heading simply based on structure. So obviously the entire way up, we had higher highs and higher lows. Now we've switched to bearish market structure, distributive structure, where you have lower highs, see 2 lower highs here, you have your low here, you have a lower low here, and it looks like now we're going to come and make another lower low. This is a downtrend until you actually start making higher lows and higher highs, which would be on a break of 82 now, clearing this low here at 81K. I mean, you can assert that the downtrend is likely to continue. So even without looking too much into the data, which of course we'll still do today, I mean, just purely based on a trend basis, this looks bearish for Bitcoin. And as long as it looks like this, I'm not that interested in trying to go long. Now, of course, there is logic behind if you still believe in it, and I'll definitely address that in today's video, then of course you can keep averaging in, lowering your cost basis, holding for multi-cycle. I think that's a valid approach for a lot of people. Personally, with my situation and where I think the market's heading, I would prefer to be more defensive, use active capital to get into higher upside opportunities in the short term, and then in an uptrend, even if I pay a slight premium, I'm happy to get back into the market, because let's say we continue the downtrend, and we have to assume the trend, is your friend until the end of the trend. I know it's annoying now that it's a downtrend, but that is still part of the game here. We have to assume that we're going to keep following that trajectory. And even if I don't catch the bottom, let's say it was 40K, and we start to climb back up, I would rather get in on the higher lows and the break of structure back at 60. So I might miss the lows, in terms of if it chopped here, but I'm getting back in at a similar level to today, but with more confidence from a structural point of view that Saylor's selling is out of the way, which we'll talk about, and that we are back in an uptrend. So I'm with the overall momentum of the market. We've seen, a lot of ETF outflows as well off the back of Saylor. Look, there's kind of this misnomer online that ETF outflows are basically, BlackRock or these big companies or institutions selling, but it's really just retail. Retail are the main purchasers of these Bitcoin ETFs. So this is really retail outflows, which I guess speaks to, the current sentiment of the market right now. And I think it's been made worse by the fact that equities, until today have been pretty much up only. So even before this dip for Bitcoin, it was still showing relative weakness, multiple days when it was going down while equities were going up. So, I think a lot of investors have been questioning, what is the narrative for Bitcoin? Why should I hold Bitcoin when when equities are performing better and are actually offering more volatility. Because the entire point of holding Bitcoin, right, is that you get more volatility, that when the market goes up, when risk is doing really well, that it's actually going to outperform. It's going to have higher beta upside. But if it's actually underperforming versus equities, then and it's less volatile than equities, then what's the point of Bitcoin? And that's definitely, aside from Saylor, one of the drivers at the moment. It's the identity piece around why hold Bitcoin when I'm not getting better. I'm getting much worse, actually, risk-adjusted returns. I'm getting much worse volatility, which is like one of the big features of Bitcoin. Now, of course, this can change. There are narratives that could, potentially kickstart the Bitcoin narrative again. But as long as you're getting, worse returns on Bitcoin than equities, I don't know if we should be super, super Bitcoin focused. But firstly, let's talk about actually what's happening with MicroStrategy. I'll keep it pretty simple because there's a lot of speculation as to what could happen, but essentially what's happening is that MicroStrategy right now, MSTR, that's obviously, Saylor's fund that is engineered basically to, raise capital through various credit instruments and purchase more Bitcoin. They are currently down on Bitcoin now with an unrealized loss of 12.7 billion. But what's even worse is that that's put pressure on their shares. So as their shares go down, and that's obviously a reflection of Bitcoin going down, their premium collapses. So when their premium collapses, essentially they can't issue more stock. They can't issue stock more efficiently, which creates conditions for them to pay back their loans that they basically can't fulfill because, basically summarizing I guess what is a relatively complex company into simple terms, they will go out, they will negotiate deals, they'll usually do it through convertible notes or they'll find other sources of credit. They will use that to buy Bitcoin. And then if the stock is in a premium, then they can issue stock, sell off stock, and essentially use that to pay back their loan obligations whilst making money. But obviously when Bitcoin goes down, it creates this negative loop where MicroStrategy goes down, they lose the premium, so they can't issue stock. Obviously, they still have cash obligations. They still have to pay back loans. So they can potentially look at doing things like either raising more capital or in a market like this where that's more difficult due to the overall health of the business, actually selling Bitcoin. And that is what we actually saw for the first time in a long time. Saylor was always the guy that said, hodl Bitcoin, buy Bitcoin. I'm never selling Bitcoin. And he actually sold Bitcoin for the first time ever. So there's proof now that he is willing to or desperate enough to actually sell his Bitcoin, which he's been really protective of in the past. And that's raised some questions over, whether MicroStrategy is in a healthy spot. And clearly the answer is no, but it's raised questions over what if this keeps going? What if he has to keep selling Bitcoin? And I think the problem is even worse because Michael Saylor was the only buyer on the way up. So I guess the tricky thing for the market to digest right now is not only, okay, maybe there's a little bit of sell pressure, which admittedly isn't much. It's maybe a couple $100 million a month, at most. But it's more the fact that not only are we getting sell pressure, but we've lost our biggest buyer because retail wasn't buying. We could see that pretty clearly here. Institutions weren't buying. It was underperforming equities. So Saylor was our big buyer. He was the one propping up the market and one of the guys that was really responsible for this big leg to the upside. So once you lose that, it raises question marks over who's going to be bidding. And then it becomes like a self-fulfilling loop where people sell their positions. They preempt potentially more sales from MicroStrategy and it spirals down and down and down. Now, the bear case is that he's gonna have to keep selling Bitcoin essentially just to be able to pay back loans. I do think there is a bit of a misconception in the market. People talk about Saylor getting liquidated. Saylor can't get liquidated. He can keep restructuring. He can push debt into the future. It's more of a slow unwind, a slow bleed than it is like a true super aggressive spiral like we saw in Luna. So this is more of an overhang that the market is now digesting and pricing in than it is something that's really structurally damaging. And I do, from a liquidation point of view, and I do think Bitcoin, with or without Saylor, will continue to perform well. But potentially what we need in the market, and I'm not 100% certain of this, I'm just raising this as something to consider, maybe what Bitcoin does need to succeed long-term is less centralization. And, Saylor holding, what was it, between 4 and 5% of the Bitcoin supply, maybe that was actually becoming a concern for Bitcoin, and maybe that was holding Bitcoin back, the theory that these sales were possible. So maybe, in the long run, these sales and flushing MicroStrategy out of the market potentially, even though it would be very ugly in the short term, maybe that's best for the health of Bitcoin long-term. I'm just raising that as a thought. I'm not 100% sold on that because I think there'd be a lot of pain caused, and will the reflexivity ever come back? There's no proof of that, so it's just a theory, but I'm just raising it as a thought experiment because there has been this growing belief in the market that it became too centralized. So The bear case is that essentially he keeps getting flushed out, which could lead to a bull case long term. The base case, and this is probably the most likely case, by the way, the bear case is not the most likely in my personal opinion. Obviously, you have to evaluate this yourself. The base case is that Bitcoin stabilizes somewhere around current levels. It basically evens out. It could drop to like mid 40s, chop for a little bit, but the market starts to digest the fact that, okay, this is a new paradigm. Strategy can now maybe sell tiny amounts of Bitcoin when needed here and there, but it doesn't necessarily mean it's a forced liquidation. The USD reserve gives them a bit of breathing room. Maybe, their stock stabilizes, and a new catalyst for the Bitcoin market, which could be a cyclical one, which we'll talk about later, could propel price upwards, and then people forget about this. I definitely think that is probably the most likely thing to happen, considering that these narratives often are really, really hyped, and everyone gets worried, and there's kind of hysteria in the market, and then typically at some point they resolve and things go away, and then there's a new narrative which takes the mind share of the market away. So I think in this scenario, that's something that could definitely happen, with the market eventually subsiding its fears as a new narrative comes in. And then of course the bull case is that for some reason, and I don't think this is the base case at all, but Bitcoin basically reclaims its uptrend. There's some other catalyst, it could be risk doing well, it could be something specific, Bitcoin overcoming quantum risk, which results in positive Bitcoin price action, which obviously reverses this negative feedback loop for MicroStrategy. There have been a few big analysts online, Vinny Lingham, Brandon Hong, people saying that they're concerned. Vinny said real nail is when he switches to bi-monthly dividends. Brandon says there's no way Saylor can keep up with the payments. They only have around 6 months of runway. I haven't looked into that specifically, but I think Brandon's a smart guy. And they're going to have to either dilute the stock, no longer accreditive since there's no NAV premium, or sell Bitcoin, which obviously, that there's been a bit of a precedent for that now. Their only path is probably just lowering the yield, which is a terrible look. That obviously affects their business, could be bad for stock, requiring, the inevitability of selling Bitcoin anyway. So just as MicroStrategy is a really reflexive vehicle for its own stock in the market on the way up, it's also a really reflexive vehicle on the way down, and is likely to make this bearish period a little more ugly than maybe people would like. And maybe it does mean there is a possibility we come and trade down at lower levels. I'm prepared for this. I'll talk about later in the video how I think the market plays out from a cyclical point of view. But in that event, I'd be a buyer. I'm just going to be a cautious trader right now, and not rush into premature entries. So I'll keep you updated as this evolves. But that is essentially what is playing out with MicroStrategy. I'm going to talk about the pattern later in the video behind, when Bitcoin typically does bottom, and how that also relates to seasonality on equities as well, which, to be honest, are the driving factor in the market. But before we get into that, let's talk about ZCash quickly, because this is one of the leaders in the market. It wasn't only Bitcoin which experienced weakness today. It was the altcoins which actually were leading over the past couple of weeks. Like if you actually look at Bitcoin dominance was basically declining whilst Bitcoin was declining. So the alts were actually outperforming, and you had some really strong alts like Hyperliquid, which is still relatively strong. You had ZCash, you had cards, you had NIA, you had a lot of these tokens doing really well in the face of adversity. And ZEC was being shilled a lot. I mean, this is a coin that I've also been holding for a while, and I got some pretty good entries. So even at the current price, I'm still not down on my cost basis. I ideally would have sold everything at the top, but you'll never sell everything at the top. So, I've been okay with it, but I've been hesitant. I've said this in the Discord a few times. I've been hesitant to add ZEC until we got a meaningful correction. What I wanted to see out of a meaningful correction was, one where the fundamentals were still intact. It was, I thought maybe price would decline due to, liquidations or just general hype subsiding, and then I'll get an entry during a cool period. But what I didn't anticipate, I don't think anyone anticipated, was the Zcash decline actually being triggered by an exploit / event that affects their underlying mechanism. And this raised a lot of trust issues. So I'll revert to Fabian, who did a great update this morning in the Mars High Club when this news broke, to actually explain what happened. So Fabian said there was a critical exploit found in Zcash a couple of hours ago. TLDR is that the security research team, with the help of Opus 4.8, this is the crazy thing, by the way, and this is where there's been other existential comments about, the future of crypto and the future of DeFi. Like Opus, the AI model, literally helped hack Zcash. So, I mean, what happens when Mythos comes out? What happens in a year when there's even better models? Like, it's going to be crazy because it's harder to defend a protocol because you're defending against like 1,000 different vectors than it is to attack a protocol, because you only need to find one vector to potentially exploit something. So, I mean, it does raise question marks about DeFi overall. I'm not going to lie. I mean, Alo even said this here. I think I've got the tweet up here. The realization that everything is vulnerable. Cryptography, smart contracts, VMs, etc. to some extent due to how quickly the latest AI models are able to pass and find bugs. In the short term, this makes every investor nervous no matter what they hold, which is completely understandable as it's a race against the bad guys. But in the long term, this will bring hardened security like this industry has never had before. I agree. I think it's a short-term period of pain where it'll flush out the bad protocols and the unhardened protocols, and it will really benefit the protocols which do survive. But it's going to be ugly, and ZCash is just the start. There's going to be a lot more, and that's just what's going to happen across the internet as a whole. It is scary times, and I do urge you, in your private capacity, to look at how you personally manage your OPSEC, because it's going to be a crazy world now with these models. But essentially, what they found with the help of Opus was a bug that allows for double spending within the Zcash privacy pool. The bug would allow an exploiter to essentially mint infinite tokens. Since it's in a privacy pool, no one would be able to verify how much and if new supply was minted. I'll pause right here because this is the big issue right now. It's the fact that the market is pretty sure that the exploiter did not mint any Zcash, but the market also doesn't know and is not able to verify if that's the case. So if you are risk off, which a lot of investors have been over the last 24 hours, you might take the stance that there could be, thousands or millions of Zcash tokens parked on the side here that maybe not millions, potentially, that could gradually hit the market over time. And that is now a factor that needs to be priced in to the market, alongside the fact that this was, basically one of the top privacy plays, and, privacy needs to be dependable. And if you lose trust in the underlying mechanisms and the underlying pool, then that damages the narrative materially. I don't think Zcash is dead forever. I definitely think it could rebound, but I think it hurts the case and it hurts the trust in the short term, and that's clearly being reflected in price. Fabian said the implications are, first, it seems likely the issue can be resolved, which is good. Total supply of tokens can be verified in the future potentially based on the team's statement. But even if that is the case, the amount of trust lost in ZEC, and that's the big thing, from this incident will take time to repair. For the moment, I do think it killed the momentum and story. I agree. I don't think it'll be a fast road back. And as I said in my post, I am personally going to take the approach of just seeing where things settle. Similar to Bitcoin, if there's a new uptrend, I'd rather pay a premium for certainty than try and catch a knife here. Interestingly, Fabian actually bought some at 300, but posted this in the Discord, but mainly just hoping for a quick bounce, probably not something he would hold longer term. He says it's actually the only thing up since the start of the day. So he actually hit a nice trade there at 300. I think for members, that would have been an instant, depending on where you got your entry, 12 to 20% at one point. So that was a good trade. But Fabian basically said, as a consequence, possible, because I think it's always good to look at second order effects, right? XMR, which is Monero, catches a bid because maybe now it's a more trusted alternative if people want to get into privacy. And potentially, as I highlighted before, the implications could extend beyond ZEC to all of crypto, because AI cybersecurity introduces new risks. And if Opus 4.8 can uncover bugs, imagine what'll happen, with some of the future models. So it could cause people to question whether every other protocol in this space also has uncovered bugs that will come to light with AI, some of which will be found by bad actors. Arthur Hayes, who's been very controversial recently, he shilled a lot of these coins. He's now backflipped and sold. I kind of agree with why people are annoyed with him, but at the same time, as an investor, you got to constantly change your thesis. Whether there's malice involved, I don't know. But I guess if something materially changes your thesis, you have the right to sell. But obviously, that's up for your interpretation. He basically just reiterates the market's thinking around potential exploits, and that it hurts trust in the protocol. He said he still holds WorldCoin and is excited for Lord Elon to pump our bags. This is a good trade. I might potentially do a future video on this. I think there's something very interesting with WorldCoin, but I want to focus on where the market is headed today. And remember, later we'll go through where I think things are going to move over the next couple of quarters. So that's pretty much Zcash. To summarize, I will wait for this to stabilize. The spot bag that I'm still holding, I will just continue to hold. It might just chop and grind back up over time. We'll see. Not totally sure. I probably wouldn't be entering now. Yeah, if you caught the short-term bounce like Fabian, good trade. I don't necessarily think you need to rush into one now, though. I'd wait to see how things pan out. Momentum is definitely lost for now, and crypto is a game of momentum. You basically just want to be playing long continuation on the things that look really strong, and if things look weak, you can be patient. It's also one of the reasons why I haven't made that many crypto videos this year. I've been more active definitely in the Discord over the last few weeks as more opportunities have arisen. But, I haven't been super active with like that many new calls because I'm not trying to force trades in a down market. And if I had tried to force the entry in ZCash, if I tried to force the entry on Hyperliquid, I would have lost money. Even though people were FOMOing in the highs, now it actually looks like a smart move to have actually waited to see where the dust settles. Hyperliquid, by the way, is probably the one where even though it's lost momentum, this is probably a dip I would buy. I mean, from the highs, it's now down 23%. I'm probably going to add a little. Technically, like the base low is 54, but this is one that I like because it basically covers a broader market than just crypto. It has, metals perps, it has stock perps, it has institutional interest beyond crypto. It's one of the only revenue generating protocols in crypto. It's one where I'm confident to buy the dip because I think personally it can go to $100 plus. Obviously not financial advice. Do your own research on where you think it'll head. But I'm comfortable having this as my biggest bag. And there are a couple others as well, which I'll speak about in future videos that I'm now weighting more heavily in my portfolio. But Hyperliquid's definitely one of them. So I don't think this is structurally impacted at all. But clearly, Bitcoin weakness, the weakness of the trio, with Near and Zcash also experiencing some weakness, and Equities down today. Obviously, this affects Hyperliquid as well. SpaceX down today also affects trading volume. We'll also talk about that because some of the volume, at least on Hyperliquid, is generated by perp equities. Now let's talk about equities, because I think they're compounding the pain a little bit here. You have the NASDAQ down 5% from highs. I mean, it's really only back to like end of May levels, but it is a significant drawdown, probably the biggest one we have had really since March, but obviously it's been on a massive tear. I mean, this just needed to happen. There just needed to be a cool down. This was way too hot. If you actually just want to do a bit of, basic TA, and sometimes with equities, especially with the gaps on the chart, I like to just, draw the line charts. This was the breakout level. I don't know if we come all the way back down and test, but if we, reset a little bit and form a new base here, I think that would be healthy. Things were really overextended. So I think this is good news, and good news for people like me who wanted a little bit more exposure. You can kind of see a bit of my watch list on the right here. Might do a video on that in the future. Let me know if you want an equities video because I've been involved in that space. But some of the things that we missed recently, like some of the semiconductor plays, BlackBerry and Nokia, which are not financial advice, I was interested in. Some of the space stocks I was interested in the lead up to SpaceX. These are now getting drawdowns that could actually persist over the next period, allowing us to potentially get some entries if you would like, alongside crypto for what could be, a better end to the year. And I'll talk about seasonality and how that factors in a second, because the market, has cooled down across the board, and gold's also down today. US dollars up, basically to summarize, off the back of stronger than expected May jobs reports, because if jobs are doing well, this means the Fed, who are already battling inflation, could potentially hike rates further, increasing the likelihood of rate hikes. Not great for risk on assets. Also, alongside the fact that earnings are under question a little bit, there's even been quotes from like Sam Altman recently talking about how demand from an enterprise point of view maybe hasn't caught up due to spending limits. Could that potentially foreshadow a slowing in demand in the market? I mean, obviously, Nvidia is still doing really well. Semiconductors are still doing really well, but they're really extended, right? So any slight hit to earnings and slight hit to rates, it can affect things reflexively in the short term. And then obviously you still have, overarching geopolitical inflation overlay from the Iran conflict. The Strait still isn't fully opened. I think the shocks on oil will be even more prominent as time goes on, because I actually think oil in the 80s was a decent long, and if you can get something in the 80s, I think it could be a solid long, considering the fact that the shocks from the Strait being closed, even if it opened tomorrow, which I don't think it is, that can persist over months and months and months as countries drain their oil reserves. I mean, even the US is down to 2004 levels in terms of oil reserves, and they're pretty well capitalized in terms of their oil stocks compared to other nations who are under real pressure at the moment. And the lingering effects on inflation might take 6 months to fully set in. It's going to cause a lot of central banks already seeing it in Australia, Europe now, US, having to raise rates to counter this. That's not a great environment for equities. But the counter story for equities is that AI is just so transformational and so hot, and could lead to deflation in the future and increased efficiency on earnings that could offset a lot of this. So I do think the truth lies in the middle. I think the market is right. AI is transformative. But in the short term, if there's any sort of pressure on CapEx, any sort of pressure in terms of investor expectations, there could be a recalibration considering how aggressively the AI story was priced into the market. And going to the cyclical chart that I wanted to show you, the mid quarters of the year, so Q2, Q3, which we're about to enter in a month, these are the weak quarters, and there is typically been really strong openings to the years and typically really strong endings to the years, recent years, and this obviously taking 1950 to 2025 into account, and that's why the whole sell in May, go away saying has come about, because the data does show you have weaker performance, especially in Q3. This comes at a point, as I said, when you have some inflation fears, geopolitical fears creeping up, stronger, jobs reports. These things are compounding in a period where the market is typically quiet. I mean, I don't think, and I'm just, speculating here, investors, fund managers, they typically go a bit quiet around August. They're not making big moves. Maybe some of the buying pressure subsides during that period. So if there is any shocks to the market, maybe the market is a bit more reflexive during that period. But I think this period in general, and it actually also lines up with the Bitcoin cycle, which I'll also show you, Q3, actually looking at how Bitcoin typically responds cycle to cycle, this could be a buying opportunity. And I mean, Benjamin Cowan spoke about October being the level where he thinks the market could bottom. Obviously, it's not going to be exact, but around that period. This also lines up with when I think equities could hit their yearly bottom. And it also lines up with typically the fact that Q4, Q1 are stronger periods for risk assets in general. So I think we may be, this is just my speculation, entering a cooler period in the market now where we see a bit of a reset. Clearly, Bitcoin is being compounded by Saylor and other factors which could make it perform worse than equities, which lead to some buying opportunities towards the end of summer, potentially later in Q3 for the very end of the year and next year. Obviously, I'll let you know if I'm buying anything, what I'm doing. There's actually a couple alts which I'm even buying now just because I think they're super strong in terms of their potential to perform well when the market picks up, and I just want to get some entries in. So if you want to know more about that, make sure to subscribe, hit post notifications. I'll do a dedicated video on what I'm actually buying, but this can lead to opportunity. So I wouldn't be panicking. I think this is where opportunities are created. If you have kept cash on the side, and I've definitely been an advocate of that, and probably I've been too capitalized, to be honest. Over the last year, I could have made more money if I was more allocated to equities. But if you were patient, you may have given up some gains, but you're probably going to gain flexibility during this period now to get some entries. By the way, with equities, to cut a long story short, this potential lull in the middle of the year is not a period where I'm looking to go macro aggressive, because from a broader cycle point of view, I think we're late stage, right, in the equity cycle. But what I am interested in doing is moving down the risk curve a little bit with some of my plays, getting some exposure to riskier assets that in a blow off top in the very end of the stock cycle, right? If we hit that parabolic phase, I can get some outperformance there to offset the fact that I'm higher in cash. So basically using the strategy of longing riskier assets as a hedge against, not having a ton of exposure to indices, because I think towards late stage, you don't want to have so much capital exposure. You want to typically have higher gold and cash concentrations, bonds, etc., to be a bit more flexible, and then DCA more aggressively during a bear market, which clearly we're not in during equities. So that's my approach to long-term equities investing. Maybe I could talk about that in a future video if you're interested, but that's pretty much it today. Thank you for watching. Had a few things to update you on, and thanks for tuning into the video, and I'll see you in the next one. Have a lovely rest of your day. Peace.